Okay, Katie, can you hear me?
I can.
Excellent. Okay, we may as well start now. First of all, just on behalf of United Media Group, we'd like to welcome everybody here tonight. There's no big secret that a few months ago we were sitting here thinking we were going to have the best year in 10 years. If anybody told me we'd be queuing up for toilet paper or having a Zoom meeting with anybody, I would have said that you were nuts. None of us could have predicted what has happened. I was fortunate enough to listen to Katie in another forum, and I was impressed. And she's got a lot of expertise in a lot of different areas. I've also had the privilege of having Katie come in and talk to us for about 4 hours, and she's going to be doing some work with us. Maybe this type of meeting is the way of the future. It's something that we've got to get used to, not only talking with our clients, but engaging with our staff. Katie will just briefly go through some of the basics of running a Zoom meeting or running a webinar, but probably the best way to do it is just to get involved. I'd just like to say that right down the bottom of the screen, there is something that says chat. So if anybody's got a question, if you can just type it in there. Katie and I will be looking at the questions, depending on how many people ask questions, and Katie will be answering them. But she'll obviously be answering just the ones, if there's multiple people asking a question. I'll pass over to Katie, and once again, just thank everybody for attending.
Thanks, Dirk. Thanks for the introduction, and thanks also for inviting me to speak. I'm grateful for the opportunity, and grateful to United Media Group for putting me up in one of your events. So I'm just going to share my screen so you guys can see my presentation. Just bear with me one moment. How does that? So can everyone see presentation now? Hopefully that's all good. Dirk, have you got that up? You're muted.
Yeah, I've got the screen up there.
Yeah, cool. All right, that's great. So look, my name's Katie Kakalis. I am a chartered accountant, a registered tax agent. I have recently launched a business named The Number Lab. That's my new accounting practice, my new accounting firm. And yeah, very happy to be here today at this United Media Group presentation, and hopefully I can give you all a little bit of information about, first of all, the coronavirus, the economic stimulus package that's been released by all levels of government, and also just, a little bit on running, for example, a Zoom meeting, and just adapting to, what is a different business environment and a different climate to what we're kind of all used to. So yeah, a bit about the Number Lab first, then a bit on Zoom meetings, I'll just touch on that, and then some detail about the stimulus package that's been released by the various levels of government. So the Number Lab is my business. As I said, it's brand new, just started at the beginning of this year. I've been working in the industry for sort of 8 or 9 years, but decided that it was time to take a leap of faith and head out on my own. And so here we are. I am a chartered accountant. I'm a registered tax agent. I've been in the industry 8 or 9 years and have worked almost exclusively with small businesses. So I've worked for a number of, large companies across Melbourne and also up in Sydney. And I've always gravitated towards the small business clients. I love working with business owners and with people who, are really appreciative of their help and support and guidance that a good accountant can give. My software of choice is Xero, so I work with all software packages, Xero, MyOb, QuickBooks, Reckon, but I'm an expert in Xero. I know it inside and out, and I do a lot of conversion. So like I, put people from antiquated softwares, update people's systems, to the 21st century. And generally that comes with, much more powerful reporting and also ease of use, and generally that reduces the admin burden and the compliance burden for business owners, which is always very well received. So the services that we offer, so the basic tax returns, financial reporting, that's all, every accountant does that. Single touch payroll. So single touch payroll is an ATO system that all businesses are now required to comply with if you have employees. And it's basically a live, so every time you do a pay run, you must report that via single touch payroll, and that information goes directly to the ATO in real time, rather than the ATO only getting information on payroll once a year at 30 June when people issue group certificates. So if you're not on single touch payroll and you have employees in your business, you should be. So reach out at the end of this this chat, this webinar, and I can help guide you in the right direction in terms of getting that set up. General compliance, BAS returns, IAS returns, ASIC compliance, that's all pretty standard stuff. I did just want to mention as well the super guarantee amnesty. So there's a huge amount of talk about all these coronavirus incentives. And if that hadn't happened, there probably would have been a little bit more focus on this SG amnesty that is being run at the moment. It runs until the 7th of September, and essentially what it is it allows, oops, I've clicked there, sorry, let's go back. It allows businesses with overdue, with late super, unpaid super, to actually catch up on that super that they haven't paid to their employees and still get a deduction for it. So ordinarily, if you pay super late, even theoretically, even if it's a day late, you actually are not entitled to a deduction for that expense. But under this SG amnesty, which ends on the 7th of September, you are actually entitled to a deduction for super, even if it's late. And that extends back to, the very beginning of super, which was in 1992. So if you've got any really old super, or even any super that is just a month or a quarter or a year late, this is the time to attend to that and catch up on those payments. A little bit more about my business. So I do a lot of new business and new structure setups. So, trust company, self-managed super, people that don't know anything about GST, about PAYG withholding, about PAYG installments. I can help out with all those kind of things. I do a lot of monthly reporting, so be that for different committees or board groups, or just business owners themselves. Just a sort of a snapshot of where the performance was for the past month, and what potentially could be improved in coming months. Advisory work, so that's things like putting together a budget, doing a cash flow, a formal cash flow, which is particularly important in these times. Forecasting how long are our cash reserves going to last, and is there some action that we need to take to ensure that we stay afloat. And also for things like, if you want to get a loan from the bank, for example, banks, have particular reports that they look for and particular things that they want to see. And, that includes cash flows, three-way models, all those sort of things. So that is something that I can help out with preparing. And the last point there, the outsourced CFO. So that's, a bit of a buzzword at the moment. basically all it means is engaging someone other than someone in the business to take on that CFO role, which might, you know, include everything from sort of bookkeeping to payroll to accounts payable and receivable, all the way up to, you know, strategic planning and, you know, and that higher level piece. So if you feel like you need some financial leadership in your business, but you're not in a position to be, you know, bringing someone in full time or what have you, tapping into someone with, you know, skills like mine can be a really effective way of doing that. So that's a little bit about me and my business. So as Dirk mentioned in his intro, I did a presentation a number of weeks ago, and he was a participant and was attended that meeting. And I do believe this was Dirk's first experience of a Zoom meeting, and he was quite impressed with the way that, you know, it all works. And I think it is a bit of a new concept to a lot of people. We are seeing it all over. You know, we're seeing that, you know, Parliament's sitting via Zoom, and the news is being broadcast with, you know, various reporters all logging in via Zoom. So it is something that has just absolutely taken off in the last few weeks. I personally have been using Zoom meetings for years. I've previously worked with staff and clients that were overseas, and this Zoom is a great way to keep in touch with them. But a little bit closer to home, Zoom is a great way to keep connected, and be that may be with staff. You know, having a staff meeting via Zoom is a great way to sort of start the day or start the week, or you know, replicate what would otherwise be an in-person staff meeting at, you know, during this period where that's not possible. Pitching for new work, so can be really hard over the phone to fully convey whatever, you know, message it is that you wanted to get out to new clients. Having a meeting via Zoom is yeah, a good way to make it more I guess personal and interactive, and we find that it works really well. Presentations, things like that. Obviously, I've got the PowerPoint up tonight. There's me having a Zoom meeting with a new client yesterday. I didn't ask her, forgot to ask her permission to put the photo up, so I thought I better put a little emoji over her face and protect her privacy. But you know, that was I signed that new client up then and there on the Zoom meeting, so that was really good. So Zoom is for a basic account, it's free, so there's no charge, and the basic account allows you to have 2 people on a call for an unlimited period of time, and it's very good for, you know, small teams and perhaps just liaising with clients. 3 people, if you have a basic Zoom account, 3 people or more, the meeting's limited to 40 minutes, so a little bit, you know, restricted on time, but you can have up to 100 participants, and you can also have an unlimited number of meetings, which is pretty good. And all meetings are recorded or have the ability to be recorded, which is helpful. And in settings like this, you know, not everyone can always attend, that's fine, but we have the ability to, you know, upload a recording, and people can watch it when it's suitable for them. If the basic subscription may not suit, for example, if, you know, you're wanting to hold staff meetings or team meetings via Zoom, or, you know, just have a group of more than 2 people, the Pro subscription is just $21 a month. So it's very accessible and affordable, and obviously tax deductible as well. And that obviously with that subscription, there's no 40-minute cap on the 3 people or more. It's an unlimited length. You also have the option of doing like a webinar arrangement, which is what we're doing tonight. So with the webinar, so in that picture there that I've got there with all the faces, that's a meeting where everyone's visible and everyone can talk and contribute and interact. The webinar arrangement is you know, hosted by someone, and you can invite, you know, a number of different people to be panelists and to present at the webinar. So that's what we're doing tonight. So different, I guess, packages for different requirements, but yeah, as I said, I've been using Zoom for years. I've had a lot of success with it, and I found it's a really good way to, you know, connect with people who you can't physically be around. I'm not saying that once this is all over, I'm not, you know, not going to be going out and meeting clients for coffees. I'm pretty sure I will be getting back to that as soon as I possibly can. But in the meantime, Zoom does a pretty good job of you know, replicating that as best as possible. All right, so I'll move on to the coronavirus economic stimulus measures that have been introduced. So there are a huge number of economic stimulus you know, measures, and there's been a number of different packages introduced by the government. And I think at the federal level, we're up to about $330 billion worth of stimulus for the economy as a result of the coronavirus. So obviously, you know, coronavirus is a health problem primarily, but what we're seeing is that it's really also a huge economic problem, and you know, the government is doing what they can to try and keep the economy afloat. So some of the measures that they've introduced: cash flow boost, JobKeeper. I'll go into those in more detail in just a moment. But there's also, I just want to point out, lots of, it's not just the federal government that's having these initiatives. So there's state government initiatives as well, some of which I will go into detail on. I'm not sure if everyone here is from Victoria as we are, but all the states have got similar incentives, as do local councils. So I know City of Yarra, for example, has got some grants around the arts. So, you know, lots of different governments are doing different incentives that are relevant for their, you know, their area, their municipality. So it's definitely worth checking out your local council and just to see what they're offering. So let's get into the detail of some of these measures. So the cash flow boost. Now, the cash flow boost was the very first incentive offered by the government after coronavirus hit, and it was quickly doubled and expanded greatly. So as the sort of the full extent of this became known, it's been sort of added to and you know, elaborated on, which is good. So the cash flow boost is a tax-free payment. It's entirely tax-free. It is paid to all businesses who have employees. So that is generally determined by whether you've got a W1 and a W2 field on your BAS. If you have a number in the W1 field on your BAS, you are considered to have employees for the purpose of this cash flow boost. Now, it's worth noting that the minimum cash flow boost payment is actually $20,000. So if you, for example, are a tiny business that has that has just one casual employee, no PAYG withholding, and you know, you might be paying 10,000 of wages a year, you're actually entitled to the minimum cash flow boost, which is $20,000. So that's a huge, you know, that's a really huge payment for these really small, for small businesses and micro businesses. And that's, you know, that is for the business. It's not for the employee. It doesn't have to be, you know, paid onto them or anything like that. It's literally just a payment for the business to inject some cash into the economy. It's also for, there's no, you know, you don't have to prove that you've had a decline in turnover or that you've been impacted by coronavirus. It's for every business, even if they've been affected in a positive way, they fortunately get the payment. So the cash flow boost payment is equal to the tax withheld on the March BAS and the June BAS if you're a quarterly withholder, or the if you're a monthly withholder, it's month of March times 3 plus April, May and June. So it's basically 6 months worth of PAYG withholding credited back to your ATO integrated client account. It's automatic upon lodgement of your BAS, and as I said, the minimum payment is 20,000. So if you've withheld 0, but you have employees and you fill out W1 on your BAS, you are still going to receive the payment. So that's obviously a huge win. People who miss out on this payment are businesses who don't have formal employees. So if, for example, you're a business with, you know, it might be a mum and dad running the family business, but you don't employ yourselves, you take your remuneration by dividend or director's fee, or if you're in a trust, by trust distribution, and you don't have any other employees, then you are going to miss out on this, on the cash flow boost, unfortunately. However, what you are going to be eligible for is the next one, the next incentive along here, which is the JobKeeper payment. So JobKeeper, I feel like it's had a huge amount of press. It's been in the news a lot. It is a very confusing, complicated piece of legislation, but it's been put together extraordinarily quickly, and it's worth $130 billion to employees, so to individuals in society and generally those who need it most. So I think it's, you know, I think the ATO and the government have been somewhat criticised in our accounting circles for, you know, how this is all how it's all played out, how the information's been released, etc. But you know, everyone's just doing the best they can in what is really difficult circumstances, and I think the fact that you know, such a generous incentive package has been managed to be put together and rolled out within just a couple of weeks is quite extraordinary. So the people who are eligible for this JobKeeper payment are, first of all, it's worth $1,500 per fortnight per eligible employee for 6 months. So if you do the maths on that, it's just shy of $20,000. And that's for each eligible employee. And that is paid by the government directly to, as a credit to the bank account of eligible businesses. So it's not like the cash flow boost, which goes through the integrated client account, the ATO account, and with that, perhaps if you've got existing ATO debt, you might find it a little bit more difficult to get that as cash in your pocket. Nevertheless, JobKeeper is paid as a cash deposit to your bank account. eligible employees are those who were engaged on the 1st of March. So that includes if employees were stood down after that date, they can be re-engaged and paid the JobKeeper payment. It's a taxed payment. So for most people, $1,500 a fortnight, there's $192 of tax on that. So it actually is $1,308 is the net payment that could pay to employees. It doesn't, there's no super to be paid on that if you are just passing along the JobKeeper payment. So if your employees are, if you've retained your employees and they're still coming to work and they're still, you know, performing their usual tasks and you're still paying them their usual wage, then you will have to continue to pay super on them. You can still apply for the $1,500 and you'll still receive that $1,500, and that effectively is like a bonus for you for, you know, keeping your employees on. But yeah, you don't have to, if you're not in a position where you've got work for these people to do and you're just simply passing along the $1,500 JobKeeper payment that you receive, then you don't have to be out of pocket and pay super on that, on top of that as well. So eligible employees, full-timers, sorry, I've skipped ahead. Full-timers, part-timers, and long-term casuals. So that is casuals who have been engaged for 12 months or longer. I've just seen a question here from Yvonne. Yvonne has asked, do you think the government will relax the deadline of 12th of March for having submitted your tax return, considering it is usually the middle of May? So, Yvonne, to answer your question, the 12th of March is the date this package was announced. That's where that date has come from. But if you are on a lodgement program list with a tax agent and you've got a due date of 15 May, then you do not need to lodge early. You do not need to worry about having already you know, lodged your returns. If they're not late, if they're not due yet, then that's absolutely fine. What was causing some confusion was that you had to, if you were an entity that was a new entity that had not lodged any tax returns yet and was not registered for GST, the ATO didn't have any information on you and on, you know, whether you're a legitimate business or, you know, what you're doing. So there was some discussion around those particular businesses having to have lodged early, but they changed their mind on that. So yeah, that wasn't the case. And if you lodge by your due date, then that's fine. That's all you need to do. Someone else has asked another question here. I'll get to this one and then I might just close this and leave the questions till the end. The question was, can you still get the JobKeeper even if you've had to take up a full-time job because your business has lost 100% of business or 100% of its revenue? So no, you can't get the JobKeeper if you are in any other type of employment other than casual employment. So if you've taken up a full-time job, you can't get the JobKeeper payment in your own, assume that's your own business, and you've gone out and gotten a full-time job. So unfortunately not. If you've gone out and got a casual job and it's that's not your main role, or that's not your basically, if you haven't ticked the box that says I wish to claim the tax-free threshold. So in other words, that's your primary employment. Then you can still claim the JobKeeper through your business and then receive a casual wage from another employer. So I hope that makes sense. All right, I'm just going to close that Q&A box because that's a bit distracting. I'll come back to it at the end. Okay, so JobKeeper. Yes, we said they need to be engaged on 1st of March. Now, we've also got this thing called an eligible business participant. So that is that was introduced in response to criticism around from the cash flow boost payment, whereby it was you know, highlighted that many small businesses do not remunerate their workers by way of salary. So they might receive a director's fee, or they might receive a dividend, or they might receive a trust distribution, etc. And that's perfectly legitimate for business owners to be remunerated in those ways. They don't have to be salaried employees. So this is where this concept of an eligible business participant came up. So each entity is entitled to have JobKeeper for one eligible business participant. So they have to be actively engaged in the business. So you can't just sort of be sitting back and letting the business run itself or paying someone else to run it. You have to be engaged in running the business, and you have to have been that on 1st of March, sorry, and you are entitled to receive the $1,500 a fortnight for that eligible business participant. But I do stress again, it's just one per entity. So if, for example, you've got a partnership and you might have 5 partners in the partnership, you only get one JobKeeper payment per entity. Now, the JobKeeper, as I said, you do have to have experienced a 30% decrease in turnover. Now that's 15% if you're a charity, and 50% if you're turning over more than $1 billion. But let's assume that everyone here is not in either of those categories. So there's 9 test periods. So there's the months March to September. So there's those 7 months. And then there's also the March quarter and the June quarter. So they're the test periods, and you only need to meet the 30% decline in turnover for one of those test periods in order to be eligible to receive the JobKeeper for the full 6 months. So even if your business dipped in March, dips in April, and then picks right back up again, that's quite okay. You're still fully entitled to JobKeeper for the duration of the program, which is for 6 months. So yeah, important to ensure that you do have that 30% decline, or you anticipate that in a future month you're going to have a 30% decline. The ATO have said that because it's based on projected, if you end up only having a 25-28% decline for the month that you projected, then that's okay, that'll be all right. But if you end up having, an increase, or having, not met that 30% decrease in turnover requirement, then you might find you're in a little bit of trouble, and you might end up in a position where you're needing to repay the JobKeeper because you were not eligible. So JobKeeper requires enrolment. It's not automatic like the cash flow boost. You need to actively take steps to enroll in the program. The enrolment for that closes theoretically on the 30th of April for businesses with STP, and the 4th of May for businesses who do not have STP set up yet, which is single touch payroll. I don't expect they're going to be hard deadlines. I just can't see that happening. There just hasn't been enough of an opportunity for everyone to sort of get themselves organised and get them get those applications and enrolments in. So I think, I think it'll be there'll be more time allowed beyond that, but they're the official dates. And with the exception of the first month, while everyone's, sorting themselves out, JobKeeper is not going to be backdated. So if you don't take any action and in June you realise, my turnover's down, my revenue's down, and I think I want to enrol in JobKeeper, that's okay, you can do so, but you won't receive the payments back from the 30th of March. You'll only receive them going forward. So yeah, that's JobKeeper in a nutshell. As I said, it is a pretty complicated piece of legislation and area, but everyone's doing their best to sort of interpret it and implement it as best they can. So another good one that I've seen, I should mention as well, the first JobKeeper payments come through, are supposed to come through on the 7th of May. As I said, they're direct credits to people's bank accounts. Cash flow boost, they said the 28th of April. The first ones will come through as credits on integrated client accounts, but I've already seen them start coming through this week, which is great. So lots of small businesses who've lodged their BAS have got the $10,000 credit and have already had that refunded out, and it's in their pockets. So that's obviously a huge help and a huge weight off the shoulders of these small businesses who are doing it very tough at the moment. So the Business Support Fund is another one that I wanted to talk about. That's a Victorian government initiative. So each of the states have got something similar, set up, but the Victorian ones, obviously that's where I am. So I know the details of that, and I've had a number of clients who have applied for that and who have already received. So it's a $10,000 grant. It's a one-off grant. And it's a fairly straightforward application. Excuse me, sorry, I just had to sneeze. A fairly straightforward application, a few requirements. So the business that's applying has to have a turnover of more than $75,000. So your micro businesses that are, maybe a side hustle or something like that, are probably not going to be eligible for this one. They have to employ staff. That can be yourself if you are the business owner, but it has to be a formal employee relationship. So a bit like the cash flow boost that we just spoke about before, you have to be paying yourself a regular salary, be paying super, be paying PAYG withholding, and reporting ideally through STP in order to qualify for that. You have to have payroll of under $650,000. So the reason for that is people with payroll of more than $650K pay payroll tax, and payroll tax, as part of a different incentive, payroll tax has been refunded. All payroll tax paid for the 2020 financial year has been refunded, and no further payroll tax is payable at all for 2020. And the first 3 quarters of 2021, so that's the coming July, August, September, have been deferred. So it'll be deferred until after January 2021. So that's the benefit that you get if you've got payroll of more than 650. So yeah, you also have to be in an impacted industry. So that's, talking specifically about hospitality, retail, events, tourism, people who've been closed, and can either no longer trade or have had their trade significantly impacted by the the closures and the things that have been happening. Yeah, it's a one-off grant, as I mentioned, $10,000. It's paid almost immediately, like within a few days of lodging the application, generally is what I've been seeing. So, between that 10,000, the 10,000 cash flow boost, which is coming in this week, and the 1,500 per fortnight per employee, which is starting, sort of maybe the week after next, from the 7th of May. The cash handouts are really starting to happen. So if you are struggling, there is help around the corner, and hopefully you are eligible for at least some of these incentives. A couple of others I want to talk about. There are some more, I would say as well. There are some more that I haven't noted here. I guess I've tried to just focus on the ones that are more business focused rather than sort of individual or household focused. So the instant asset write-off has been increased to $150,000. So that what that means is you can go out and buy an asset, a new asset to use in your business, and anything up to the value of $150,000 can be immediately written off for tax. So you get a deduction for that in full in year one, even if you go out and buy it on 30th of June or 29th of June. If it's ready, if it's installed and ready for use, and you're using it on that date, then you absolutely can claim 100% of the purchase price in the 2020 financial year. Now that only is until 30th of June, so there is a time limit on that one. And I would urge you, if you've been thinking about any purchases, so even if it's like a new computer or something like that, do it before 30 June so that you get the deduction in full in the 2020 financial year. I should just say as well, if you do go out and buy something like a car, for example, you can go out and spend $150,000, but you're not going to get the luxury car limit. Still applies. So 56,000 is the maximum that you can claim for a car, but you will get that 56 in full in the 2020 financial year. And after 1 July, so I know the instant asset write-off sort of went from, it used to be 1,000, then it went to 5,000, then it went to 10, 20, 30, and now it's at 150. It is dropping back to 1,000 on 1 July. So that rules out, even if it's like a new computer or something, might be, $1,500, $2,000, $3,000. From 1 July, that's no longer going to qualify for the instant asset write-off. So, would urge you to make those kind of purchases prior to 30 June if you can, if cash flow allows. Loan repayment deferrals. So the Australian Banking Association mandated that business loan repayments the banks must allow business loan repayments to be deferred. The banks accepted that and extended that to residential loans and other loans too. So the banks generally are being pretty good about this whole situation. Obviously, if you defer loan repayments, interest still accrues, so that is something to think about. The interest is not going to stop accruing for those periods, so you do end up essentially paying back more. But if you are in a position where your cash flow does not permit you to, does not allow for you to, to make repayments, then that's a better option than, being foreclosed on or being out on the street or what have you. So, you can speak to your bank about, individual banks about that. Rent negotiations, so obviously commercial tenancies who've been shut down, residential tenancies, people who've lost their jobs, all those sort of things, they are happening all over the place. The government released some guidance around particularly the commercial rent negotiations and, you know, deferrals and reductions, but then ultimately just sort of said, you know, you're all grown-ups, go and work it out yourself, kind of thing. So but there are some definite strategies that are emerging in terms of the way that people are going about that and what they're asking for. So I'm happy to chat about that in further detail if anyone wants to, you know, discuss their particular circumstances. Tax payment deferrals. So tax PAYG instalments or have been the ATO has allowed people to vary their March and June instalments to nil, and also claim back the credits of any instalments that they have paid in September and December. So they ordinarily, you'd be risking a penalty by doing that if you ended up having tax to pay at the end of the year. But to help with cash flow during this time, the ATO have said that you don't have to pay any March instalments and you can get credits back for what you've already paid for September and December. So that's all claimable through the March BAS. So if you need any help with how to fill that out to make that happen, you can let me know. Early access to super, so that's, I guess, more for individuals. $10,000 in by 30 June, and then $10,000 in the first quarter of in the September 2020 quarter. So it's $20,000 in total. Now, when the ATO announced this, there were a lot of people who very cleverly thought, oh, I'm going to pull that $10,000 out of super and then recontribute it back in as a personal contribution and get myself a nice tax deduction of $10,000. The ATO has very quickly come and said, no, you cannot do that. And there'll be strict penalties for anyone that tries to do that. The reason being, the early access to super is an extension of the current hardship provisions that are in place. So at the moment, if you are suffering severe financial hardship, you can actually apply to get money out of your super, and that's the case at any time. It's got nothing to do with coronavirus. But now, because of the situation that we're in with the virus, the hardship provisions have been extended to allow this early access due to coronavirus. But yeah, I guess the idea is not that you take the money out because you need it to pay, for bills and food and rent. It's not that you take it out and then tip it back in, because I guess you don't meet the hardship requirements if that's what you want the funds for. Payroll tax refunds, I did touch on that one before. The Victorian government is refunding all 2020 financial year payroll tax and deferring the first quarter of 2021. Same for land tax. If you've got any non-residential land holdings worth less than $1 million, so commercial land worth less than $1 million, you can have your land tax deferred, so you don't have to pay that by the usual due date. Job Seeker, a bit of an alternative to the Job Keeper. That's the one that's through Centrelink. It's a similar amount of money. It's been doubled, so it's about $1,100 a fortnight. Plus, if you are renting, you can get rent assistance, which is another $200 to $300 a fortnight, which brings you to around the same as the net Job Keeper payment. And Boosting Female Founders, now that's a grant that is offered by the government. It's It's actually got nothing to do with coronavirus, but it is a grant that not a lot of people know about. And it is, if you're a woman in business and you're a majority owner of a business, you can apply to have some grant monies to enable you to, I guess, promote and grow and expand your business into areas that traditionally have been male dominated. So that's a good one to check out if you haven't heard of it. And I think that's just about it on the coronavirus incentives. I will just say that we did think that we might do these sessions regularly. Dirk and I and Ben and Sam had a chat about, we're quite open to that. So please let us know if that's something you'd be interested in. Give us some feedback. Give us, some suggestions on topics that you'd like to hear about. A couple that, I am well versed in. Xero. So Xero is an online accounting platform. Really great system, really easy to use, designed for business owners, not accountants, not bookkeepers. Tax planning, things that you can do to make sure that you're optimally positioned at 30 June come tax time. And reporting, I guess, links back to Xero, how to use tracking and use jobs in your reporting system to generate really, useful and powerful reports that give you as a business owner the information that you need. So yeah, and anything else that you wanted to hear about, accounting tax wise, I'd be very happy to run a session on that. That's it from me. My contact details are at the bottom there. Please do feel free to reach out if you've got any questions, specific to your circumstances. And not everyone wants to discuss in the group forum, which is absolutely fine. There are some Q&A questions here and also some questions in the chat box. So I might just start with the chat box if I can, and we'll just have a look here. Okay. So I think we've done the one about if you had to get a full-time job. Yeah. What happens if, so Julia is asking, what happens if the business decreased 30% turnover only in April, was fine in March and might catch up in May? Are they eligible for JobKeeper? So yes, they are. So as you said, the turnover only needs to decrease 30% for one of the test periods. And I should note as well, I'm not sure I mentioned this, but it's compared to the same month the year prior. So it's April 2019 compared to April 2020. And if you've decreased 30% based on your prior year turnover, then even if it's only for 1 month out of the 6 months or 1 quarter, that's okay. You only need to tick that box once, and once you've ticked it, that's fine. You are eligible, and you will get the payments, and you should register. So I hope that answers that, Julia. Yvonne, one more question. If you have registered for the JKA, JobKeeper allowance, how will the ATO let us know when and how to report for the month? Okay, so if you clicked a couple of weeks ago, if you clicked on the link and registered your business ABN and name and said, I'm interested in finding out more about JobKeeper, that is not enrolling in JobKeeper. So as of Monday, like 3 days ago, official enrollments for JobKeeper opened, and you have to formally enroll, which you can do via the business portal, or your tax agent can do it via their tax agent portal. And then you need to report, so you need to specify how many employees you're going to pay, etc., etc. And you then need to, if you're registered for STP, it's pretty much all automatic through STP reporting. If you're not registered for STP, there's a more extensive reporting process that you need to do every month, which includes putting in all the names and TFNs and details of every person that you've paid. So if you're not on STP, I would strongly, yeah, what's STP? Okay, so STP is single touch payroll. And single touch payroll is the system that I was talking about earlier that links payroll information to the ATO in real time. It's a requirement for all businesses with employees, and yeah, all the software, so like Xero, Marv, QuickBooks, they all have STP compliant payroll systems. So Yvonne's just saying sole trader. Okay, so if you're a sole trader and you're your own, you're the only employee, you'll need to register through MyGov. Or otherwise through your tax agent. So same thing. You need to go to the employee tab on MyGov and click JobKeeper enrollment, and make sure that you enroll yourself in the JobKeeper program. Now, the payments are going to start from the 7th of May. The official period runs from the 30th of March to the 27th of September. So it's that 6-month period that is being covered. There's no discretion around that. If you, obviously the first month, we're already nearly at the end of it. So the first month, there's a bit of a delay on the payments getting out. But after that, they're gonna be paid, I think it's by the 7th of each, the 7th of each month following when the payments were made. So yeah, okay, I'll just have a look here in the Q&A. Hi Katie, is the cash flow boost similar as the business supper, I think it's support fund, $10,000 if you've already, yeah, they're completely separate. So the $10,000 business support fund is a state-based initiative. It's from the Victorian government, or New South Wales, or wherever you are located. And the $10,000, the cash flow boost, sorry, is irrespective of the Victorian government grant, will be credited to your income, to your integrated client account with the ATO upon lodgement of your March BAS. So March and June, if you lodge quarterly, that's the initial one, and then June and September, and if you lodge monthly, it's a little bit more frequently than that. But yeah, so if you, for example, have 3,000 of withholding for the March quarter, you'll get a $10,000 credit because that's the minimum, and then you'll get another 5 in June and another 5 in September. And that's upon lodgement of your BAS return. So you don't have to apply for the cash flow boost. It's not an opt-in, it's an automatic thing. So the trigger is the lodgement of the BAS returns for that one. Someone has asked, I hope that answers that, Lily. Someone has asked, does the JobKeeper stop as soon as the business reopens? No. So JobKeeper runs for 6 months. It covers the period 30th of March to 27th of September. And as I said, you only need to qualify for one period to get it for the whole 6 months. So people are getting really confused, when my business reopens or when my turnover picks up again, do I drop out? No. If you've qualified, if you've genuinely qualified for 1 month and you've had the required drop in turnover, then you're fine. You get it for 6 months, and when it ends, it ends. but you don't have to, you don't sort of give it up once your turnover gets back to normal or you reopen. Someone has asked, are you happy to manage all my accounting needs from start to finish, including bookkeeping every quarter? So yes, I can do that. If someone's using Xero or someone's using an accounting software, then I find that I'm very happy to do the bookkeeping, and it actually it usually works out, a bit cheaper, certainly not any more expensive, because you just have one person handling everything. So, I'm across all aspects of your business. I would recommend, for circumstances like that, either a monthly or a quarterly kind of check. So someone's doing their own bookkeeping, or they've got a separate bookkeeper. It's really useful to have an accountant, be it myself or someone else, do a bit of a periodic check over of the book, so monthly or quarterly, and that can be part of the BAS process. Usually is how it works. But yes, I can take on whatever role the client would like. In terms of software conversion, so I've had another question here about changing accounting over to Xero. So that is something that I do regularly, and I specialize in. So if you've got either another system up and running at the moment, so it might be like a desktop Mile, for example, or you're just using Excel, or you're just using, I had a new client yesterday who told me that she's got, one of those big A1 books where you write row by row, you write in the different columns. I can't even remember what they're called, but anyway, if you've got that, that's okay. I can definitely get you up and running on Xero, and I can't tell you, I would have done that hundreds of times, converted people onto Xero, and I've never had a single person, regret it, or I've only ever had the feedback of, why didn't you make me do this sooner? So yes, I absolutely can get anyone onto Xero or any online platform, no matter what their current reporting system is. Had a question here from Liza. Why do you have to report every month then? If you qualify for 6 months, meeting period, one period only. So you have to report because you have to tell the ATO how many employees. So for example, your employees might resign, they might leave, and so you would therefore no longer be getting the JobKeeper payment for them. You also have to report your GST turnover figures to the ATO. So if you meet, say you meet in March and you've ticked the box, that's fine. You are definitely eligible for the entire time. You do still have to report your turnover figures every month. Now, the ATO may want to use that for, their own data and their own purposes, but it is certainly not to, try and say that you're ineligible or what have you. They're very clear on those requirements. For the JobKeeper, after we receive the $1,500, how do we pay our full-time employees if they start working part-time now since April? Okay, and how long will the JobKeeper last? So JobKeeper lasts for 6 months. If you're an eligible business and you're in, then you're in for 6 months. So it's 13 fortnights, 13 payments of $1,500 per employee. You have to, if you've had people who were earning more than that, or say full-time employees, and they now are just eligible for the $1,500 because they're not working, you're not paying them anymore, You need to process the $1,500 in your accounting system as payroll. It's recommended that you do it as an allowance and deduct tax from that. So that's the $192 that I mentioned earlier. And then, so that brings the net payment to $1,308. You don't have to add any super on top of that. You have to pass on the $1,308 in full. That belongs to the employee, not to you. However, the $192 of tax, if you think about the interplay between the cash flow boost that I was talking about and the tax withholding on the JobKeeper payment, for most businesses, most small businesses, the ATO, you're actually going to get that covered anyway. So that is a little bit of a bonus for the employer, the $192 a fortnight of tax that they withhold from the employee, and then actually gets covered by the cash flow boost. So they end up getting that as a, you know, small win in their pocket. So I hope that answers the question. And there's no super on top of that either, Lily. So yeah, just passing along the payment that you receive, you're not out of pocket having to pay the sort of $150, $140 odd of super on top of that. So I hope that makes sense. There's a question about managing accounting remotely. So yes, I work with clients all over Australia, sometimes via Zoom, sometimes just by phone and email. But these days, it's very, you know, accounting systems are generally all cloud-based, all the good ones are. So the beauty of that is everyone has a login. I can log in here in Melbourne, or, you know, I'm in, my office is in Richmond. I can log in from Richmond. My client might be in Essendon. They can log in Essendon, and we can both be looking at the same information at the same time. And that's, you know, a very common arrangement. So yeah, absolutely can manage everything remotely, and often do. That's the way that it often does go. We're back on JobKeeper. One of my employees is in a grey area because she's waiting for her PR. Okay, I don't think she's going to qualify. Probably, like, that's just general advice without knowing the exact situation. But yeah, it does sound like it's a bit grey. If she hasn't got her PR yet, then I'd say she probably isn't eligible. And that's okay. There are a few questions, but all good. I'm just going to jump back to the chat. Sorry, I've just been in the Q&A. So there's a couple of people asking about the Boosting Female Founders grant. So reach out to me after the session if you want to find out a little bit more about that. It's not really targeted at what I'd call a micro business. So like if it's just a one-man show. And the other thing that I would note about it is you do actually have to spend the money. So it's not like cash handouts like what we're seeing with the cash flow boost. But if you're spending money on, you know, marketing and growth, and, you know, there's a specific list of activities, then you can have some of that money, you know, reimbursed or covered by the program. Okay, there's a really detailed question here from someone. I'll answer the second part first about the cash flow boost. It says for the cash flow boost, just say if my BAS is 6,000, first payment is 10,000 from the government, is the remaining 4K credit until I lodge my next BAS, or will the 4K be cash into my bank account? So it will sit as a credit on your integrated client account, and then it will be refunded. So it is a refundable credit. It will be cash in your bank account. It does not have to be used to pay the ATO. It can be used to pay whoever you like. So yes, that will be cash refunded from the ATO into your bank account. If I haven't paid my employee on the 15th, if I haven't paid my employee $1,500 on the 30th of March, meaning I can't apply for JobKeeper in April. Well, not necessarily. It will be safer if I apply in May and start paying the employee from 27th of April. Does that sound right? So actually, because this is the very first month of JobKeeper and everyone's still, they haven't even finished the legislation, let alone finish rolling it out, and it's all a bit of a, movable feast. Don't worry if you haven't paid the first 2 fortnights of JobKeeper on time. If you catch them up by the end of April, then you can you're okay. But in future fortnights, you must pay within the specified fortnight. So for the first 2 fortnights, which is the fortnight ending the 13th of May, 13th of April and the 27th of April, if you haven't paid on time, don't worry, just pay as soon as you can, and you can still claim the $1,500 for those 2 fortnights. But going forward, after that, that allowance is only for the first 2 fortnights, not the whole program. So now that we've sort of understand how it all works, as of next month, the payments must be made to employees. Last question here, can I give financial advice on bettering businesses? So I'm not a financial advisor. I cannot give financial advice. What I can give is business advice. So in terms of, advising strategically, advising, practical tips and, improvements that can be made to businesses. Absolutely, that's almost my bread and butter. That comes with, being an accountant and being an advisor, business advisor, and that's something that I do every day, and something that I, really enjoy doing as well. So yes, business advice, which, covers tax planning, it covers software, it covers reporting, it covers, strategy, it covers a plethora of areas, is certainly something that I can assist with for people who have an interest in improving their businesses. So I might leave it there because I think I've gone over time. So thanks everyone so much for listening and for your questions, and hopefully you got something out of the session and I was able to answer everyone adequately. Please feel free. My contact details, are they still on the screen there? I think they're at the screen on the bottom corner there. Please feel free to reach out to me if you do have any more specific questions about your business. I'd love to have a chat about how I might be able to help you. So I'll pass back to Dirk. I'll just stop sharing my screen.
Thanks for that, Katie. Look,
No worries.
Yeah, look, we're going to try and keep it to an hour. We've gone 10 minutes.
Yeah, I've gone over with all the questions. Sorry about that.
No, look, that's understandable. Look, I found it fantastic. It is changing times, and it's difficult to get somebody a straight shooter that's going to give you all the answers. I know I've got a question or two which I'll contact you later. But thanks for helping us out. It's important that every
pleasure.
We want every industry to succeed. Anybody who wants to get in touch with us and give us any ideas or feedback, this is something we might do in 2 or 3 weeks, or 3 or 4 weeks time. Once we see, when the when job has come through, the cash boost has come through and whatnot, and people might have more questions from there. So guys, thanks very much for attending. Let us know what your thoughts are. And Katie, thanks very much.
No worries, my pleasure. Thanks, everyone.
Not all.